Let's be real. If you've got $500 sitting in your account right now, chances are you're debating two things. Do you blow it on something fun, or do you actually try to make that money work for you? Most people will say, it's only $500. It's not life-changing. But that's where they're dead wrong, because the way you treat small amounts of money is exactly how you'll treat big amounts later.
Exactly. Think about it. If you can't manage $500 wisely, how are you ever going to handle $5,000 or $50,000? Wealth doesn't start with $1 million paycheck. It starts with discipline, strategy, and making every dollar count. So today, let's break down exactly how I'd invest $500 in 2025 to set myself up for the biggest long-term payoff.
Before we jump in, here's the truth. There's no magic turn $500 into $50,000 overnight button. And if that's what you're looking for, you're going to fall for scams, hype coins, or lottery ticket stocks. What I'm giving you today are strategies that actually work. Some are slow and steady, others carry more risk, but every single one of them is designed to maximize that $500 without gambling it away.
And that's the key. Maximization doesn't always mean the fastest return. It means the smartest return. Because the number one mistake people make with small amounts is going all in on a single gamble. If it fails, boom, you're back to zero. Instead, we're going to break this $500 into smart allocations that balance safety, growth, and even a little bit of calculated risk.
Let's set the stage. Imagine the economy right now. Inflation is still a factor, AI is changing the job market, and everyone on TikTok is promising you that their side hustle is the golden ticket. The truth? Most of that advice is trash. But here's what matters. With $500, you're not trying to retire tomorrow. You're building habits and planting seeds that could grow into serious wealth later.
Couldn't agree more. So here's how we'll do it. First, we'll look at safe options, where your money grows without you losing sleep. Then we'll hit medium risk plays, things like stocks and maybe even a slice of crypto. And finally, we'll touch on higher risk opportunities, like putting that $500 into yourself, your skills, or even a small hustle. By the end, you'll see exactly how I'd split that $500 dollar by dollar to make the absolute most of it.
All right, let's dive in. Step 1, the safe, low-risk options that protect your money while still making it grow. Because the first rule of investing is simple. Don't lose money. Let's go. Let's start with the safest place. Because the foundation of smart investing isn't about swinging for the fences. It's about protecting your downside. If you've only got $500, losing it all on a bad bet hurts way more than the thrill of doubling it. So let's talk about where you can stash a portion of this money for low-risk, steady growth.
First up, high-yield savings accounts and CDs. Sounds boring, right? But hear me out. Some online banks in 2025 are offering 4 to 5% APY. That means if you parked just $200 of your $500 in one of these accounts, you'd be earning interest while keeping your cash completely safe. It's not going to make you rich, but it ensures that a chunk of your $500 is always working, even while you sleep.
Exactly. Think of this as your safety net. When you're building wealth, safety nets matter. If something unexpected happens, you need gas, groceries, or an emergency purchase, you won't be forced to sell riskier investments at a loss. That's why I'd put around 30 to 40% of the $500 into something stable like this.
Next, ETFs, especially broad market ones like the S&P 500. Thanks to fractional investing, you don't need thousands of dollars anymore. You could put as little as $50 or $100 into an ETF that tracks the entire U.S. stock market. Historically, the S&P 500 averages around 8 to 10% annual returns. That's the long game. Slow, steady compounding that turns $100 into way more over time.
And here's where strategy matters. If you set up something called dollar cost averaging, you're automatically investing a set amount on a regular schedule, say $50 a month, no matter what the market is doing. That way, you're buying when prices are low and high, averaging out your cost. It removes emotion and FOMO, which are the biggest killers of beginner portfolios.
Now, some people roll their eyes at just buy the S&P 500, but think about this. If you had put $500 into the S&P 500 20 years ago, you'd be sitting on several thousand today without lifting a finger.
That's the power of compounding and patience. And in 2025, with inflation still biting and wages lagging, putting your money into assets that historically outpace inflation is one of the smartest moves you can make.
Another safe but slightly spicier option, bonds. Government bonds or bond ETFs give you a guaranteed return, usually a little lower than stocks, but with much less volatility. If you're the type who panics when your portfolio dips, putting $50 to $100 of that $500 into bonds might help you sleep at night.
So let's put this into a real allocation. If I had $500, here's how I'd split my low-risk bucket. $200 into a high-yield savings account or CD, $150 into an S&P 500 ETF, and maybe $50 into bonds. That's $400 locked into safe, low-stress investments that are growing while protecting my money. That leaves $100 left for the bigger growth plays we'll cover in the next part.
Exactly, because once you've built that foundation, you can afford to take some calculated risks with the rest of your money. And that's where the potential for outsized gains comes in. So let's move into the medium risk plays, the ones that could realistically double or triple that $500 if handled correctly.
Now that we've got the safe foundation locked in, let's talk about medium risk investments. These are the plays that actually have the potential to double or triple your money over time, but they also come with more ups and downs. With $500, you don't want to go too crazy, but a little bit of risk is what drives growth.
The first stop in this category is sector-specific ETFs, or fractional stock investing. Instead of just buying the whole market, you can target industries that are expected to explode in the coming years. Think artificial intelligence, green energy, or healthcare. These are sectors with tailwinds behind them, meaning the world is pouring money into them whether you invest or not.
Exactly. Let's break it down. AI is changing everything. Companies like NVIDIA, Microsoft, and even smaller AI-focused firms are driving the future. If you put $50 into an AI-focused ETF, you're essentially betting on an entire wave of innovation instead of gambling on one company. Same thing with green energy, solar, EVs, wind power. Governments worldwide are pushing toward renewable energy, which makes it one of the safer growth bets for the next decade.
Another option in the medium risk bucket is crypto, but with rules. I'm not talking about chasing the next meme coin. I mean the big names, Bitcoin and Ethereum. You don't need to drop $500 to buy a whole coin anymore. With fractional investing, you could put $50 to $75 into Bitcoin or Ethereum as a small slice of your portfolio. These assets are volatile, sure, but they also have a track record of massive long-term growth.
And here's the key. If you're going to play with crypto, you have to play smart. That means sticking to coins that have proven themselves, avoiding hype, and maybe even moving your funds into a self-custody wallet if you plan to hold long-term. Remember FTX? Billions lost overnight. If you're treating this seriously, protect your money.
Let's not forget individual stocks. Maybe you believe in Tesla, Apple, or some new biotech firm. With apps like Robinhood or Fidelity, you can buy fractional shares with as little as $1. This is where your personal research and conviction come in. If you understand an industry well, say you work in healthcare or tech, you might have insights into which companies have real staying power.
So how would I allocate my $500 in this category? Out of the $100 left over from part 2, I'd split it like this. $50 into an AI or tech-focused ETF, $25 into Ethereum, and $25 into a renewable energy ETF. That gives me exposure to the fastest growing sectors while keeping things diversified.
Notice how the key here is balance. You're not putting all $100 into one single gamble. You're spreading it across multiple high-potential plays. That way, if one underperforms, the others can carry your portfolio. And this is where most beginners mess up. They go all in on one stock or one coin and hope for the best. Don't do that. Diversify, even at this small level.
And now comes the fun part, the higher risk entrepreneurial plays. This is where you use $500 not just to invest in other people's companies, but to invest in yourself. Because sometimes the best ROI doesn't come from Wall Street. It comes from building something of your own. Let's break that down next.
All right, now we're stepping into the higher risk zone, the entrepreneurial plays. This is where your $500 can either grow faster than anything else or disappear if you're not careful. But here's the thing. Some of the wealthiest people today didn't just invest in other people's companies, they invested in themselves. With $500, you can do the same.
Exactly. Think of it like this. Wall Street might turn your $500 into $550 next year if you play it safe, but investing in yourself could turn it into $5,000 or more over time. The trade-off, it requires effort, creativity, and patience. Let's talk about a few ways you could use this money to plant the seeds of something much bigger.
First idea, start a small side hustle. With $500, you could launch a print-on-demand business where you design custom shirts, mugs, or digital products and only pay for items when someone buys them. Platforms like Etsy or Shopify make this easier than ever. You won't get rich overnight, but if one of your designs takes off, your little $500 experiment could turn into a consistent cash flow.
Another option is digital content creation. You could buy a decent microphone, some lighting, or even editing software and start a YouTube channel or TikTok account around a topic you care about. Content takes time to grow, but the upside is enormous. One viral video can pay back your $500 investment many times over.
Or you could go the skill building route. Instead of chasing a side hustle immediately, use that $500 to level up your skills. Buy an online course in coding, digital marketing, or graphic design. That knowledge could land you a higher paying job or freelance gigs that pay you far more than the stock market ever could.
Let's not forget freelancing. Maybe you've already got a skill, writing, editing, video production, design. You could use the $500 to create a simple website, buy software, and market yourself on platforms like Fiverr or Upwork. That way, your investment turns into a tool for generating more income on demand.
Of course, the risk here is that these entrepreneurial plays depend on you. If you don't put in the work, the $500 might not turn into anything. But if you commit, the upside is virtually unlimited. And honestly, I'd argue that putting part of your $500 into yourself is one of the smartest moves you can make.
So, if we were to allocate the final piece of our $500, I'd take around $50 to $100 and put it towards something entrepreneurial. That way, even if your stocks and ETFs are just slowly growing in the background, you've got one lottery ticket that you control, your own hustle.
And that brings us to the wrap-up. We've gone through safe plays, medium risk growth, and entrepreneurial bets. Now it's time to put it all together into a clear, dollar-by-dollar strategy you can follow today. Let's finish this off with the exact breakdown of how I'd invest $500 right now. All right, let's bring it all together. We've talked about safe plays, growth plays, and entrepreneurial plays. Now the big question, how exactly would I split $500 today to make the most money?
Let's break it down step by step. First, the safe foundation. I'd put $200 into a high-yield savings account or a CD. That gives me security and flexibility if I need quick cash. Then I'd add $150 into an S&P 500 ETF for long-term, steady growth. Finally, I'd put $50 into government bonds or a bond ETF for extra stability. That's $400 of the $500 allocated into safe, low-risk plays.
Next, the medium risk growth bucket. From the remaining $100, I'd split it into $50 for an AI or tech-focused ETF, $25 into Ethereum, and $25 into a renewable energy ETF. That way, I'm exposed to innovation and industries that are shaping the future without putting all my eggs in one basket.
And then comes the final piece, entrepreneurial investment. I'd take $50 from that original $500 and put it towards a skill, a side hustle, or content creation. Because while stocks and ETFs build wealth slowly, investing in yourself can open doors to income streams that no index fund ever could.
So here's the final breakdown in plain numbers. $200 goes to high-yield savings or CD, safety net. $150 to S&P 500 ETF, long-term growth. $50 to bonds or bond ETF for stability. $50 to AI or tech ETF future growth, $25 into Ethereum, crypto exposure, $25 into renewable energy ETF, sector bet, and $50 to yourself, skills, side hustle, content creation.
That's $500 total, balanced, diversified, and positioned to grow. Notice what we didn't do. We didn't chase hype coins, gamble on a single stock, or blow the whole $500 on something risky. Instead, we spread it smartly so every dollar has a purpose.
The truth is, $500 isn't about making you rich overnight. It's about building the habits and mindset that eventually let you manage $5,000 or $50,000. The earlier you start, the sooner compounding and growth start working in your favor.
And remember, the best investment you can ever make is in yourself. Because when you're disciplined, consistent, and focused, even $500 can be the start of something life-changing.
So, if you've got $500 sitting in your account right now, don't let it collect dust. Put it to work. Protect some of it, grow some of it, and bet a little bit on yourself. That's how I'd invest $500 today to make the most money.
And with that, we're done. Now it's your move. What are you going to do with your $500?